All right, everybody, listen up. We need to talk about something incredibly important. It's something that can open doors for you or slam them shut right in your face. I'm talking about your credit score to be exact. Think of your credit score as your financial report card. It tells lenders, landlords, and even some employers how responsible you are with money. A good credit score is not just a nice thing to have. It's a must-have in today's world. It's your golden ticket, your key to unlocking better interest rates on loans, qualifying for a mortgage, or even getting that dream apartment you've always wanted. Without good credit, you're swimming upstream with weights on your ankles. Why does it matter so much, you ask? Let me tell you. It matters because it impacts almost every major financial decision you will ever make. Want to buy a car? Your credit score will determine the interest rate you pay, which can mean thousands of dollars difference over the life of the loan. Planning to buy a home? A good score can be the difference between approval and denial, or getting a manageable mortgage payment versus one that strains your budget every single month. Even getting a new cell phone plan can be impacted by your credit history. It's a fundamental piece of your financial foundation, and you must take it seriously. Many people, especially when they are just starting out, don't fully grasp the power of their credit. They might make a few late payments thinking it's no big deal. Wrong! Every financial move you make, every bill you pay on time or miss, contributes to this powerful number. Building good credit is like building a strong house, brick by brick. It takes time, it takes discipline, and it takes making smart choices. Ignoring your credit is like letting the foundation of your financial house crumble. You wouldn't do that, would you? Of course not. So you need to be proactive and informed. So the big question is, how do you build good credit? Or, if your credit isn't so great right now, how do you repair it and make it stronger? There are many paths, but today we are going to focus on one very smart path. A path that often gets overlooked but can be incredibly beneficial. We're going to explore how choosing the right financial institution, specifically a credit union, can give you a significant advantage in building a credit history you can be proud of. This is about making your money work for you and building a secure financial future. Are you ready to learn? Good, let's get started. Now, let's talk about banks. You see them everywhere, don't you? Big buildings, familiar names, they've been around for a very long time. Banks are financial institutions that are in business to make a profit. That's their primary goal, to make money for their shareholders. They offer a wide range of services like checking accounts, savings accounts, loans, mortgages, credit cards, and investment products. Many of us have our first banking experiences with these large traditional institutions. They are a cornerstone of our financial system, providing essential services that help the economy function. Banks are typically owned by stockholders. These stockholders invest money in the bank, and they expect a return on their investment. This profit motive drives many of the decisions banks make, from the fees they charge to the interest rates they offer on loans and deposits. Because they are focused on maximizing profit, they might sometimes seem impersonal. You might feel like just another account number. Their lending decisions are often based on strict, standardized criteria, which can make it harder for individuals with less than perfect credit or limited credit history to get approved for loans or credit cards that can help them build that history. The services offered by banks are generally very comprehensive. You can usually find everything you need under one roof, from basic banking to complex wealth management. They have extensive ATM networks and sophisticated online and mobile banking platforms, which offer convenience. This convenience is often a big draw for customers. However, this convenience can sometimes come with higher fees for certain services or stricter requirements for fee waivers. It's always important to read the fine print and understand exactly what you are paying for when you bank with a large traditional bank. So banks play a vital role, but their structure and profit-driven nature mean they might not always be the best fit for everyone, especially if your main goal is to carefully build or rebuild your credit score from the ground up. While they offer credit-building products, their approach can be less flexible and less personal than what you might find elsewhere. Understanding this fundamental aspect of how banks operate is crucial when you are deciding where to manage your money and, more importantly, where to seek help in strengthening your financial standing. Remember, knowledge is power, especially when it comes to your finances. Okay, now let's shift gears and talk about credit unions. These are a different breed of financial institution, And I want you to pay close attention because this is where things get really interesting for building your credit. A credit union is a not-for-profit financial cooperative. What does that mean? It means it's owned and controlled by its members, the very people who deposit money and take out loans there. Think about that. You are not just a customer at a credit union, you are a part owner. This is a fundamental difference from a bank, and it changes everything. Because credit unions are not-for-profit, their main goal isn't to make money for outside stockholders. Instead, their mission is to serve their members. Any profits they do make are returned to the members in the form of lower fees, better interest rates on savings accounts, and lower rates on loans. This member-focused philosophy creates a completely different atmosphere and a different set of priorities. They are there to help you, their member owner, achieve financial well-being. It's like being part of a financial family that genuinely cares about your success. To join a credit union, you usually need to meet certain eligibility requirements. This is often called a field of membership. You might be eligible if you live in a certain geographic area, work for a particular employer, or belong to a specific group or association, like a church or a school. Don't let this scare you off. Many credit unions have very broad eligibility criteria these days, making it easier than ever to find one you can join. Once you're a member for life, even if you no longer meet the initial eligibility requirement. The range of services at a credit union is very similar to what you'd find at a bank. They offer checking and savings accounts, auto loans, mortgages, credit cards, and often financial counseling. While their ATM networks might not be as vast as the giant banks, many credit unions participate in shared ATM networks, giving you access to thousands of surcharge-free ATMs nationwide. The key difference lies in their approach and their commitment to their members' financial health, which can be a game changer when you're focused on building a strong credit history. They are often more willing to look beyond just the numbers. So, we've defined banks and we've defined credit unions. Now, let's put them side by side and really highlight the crucial differences, especially when it comes to managing your money and, most importantly for our discussion, building that all-important credit score. The first major difference, as we've touched upon, is ownership and mission. Banks are for-profit entities, owned by shareholders, driven to maximize those profits. Credit unions, on the other hand, are not-for-profit cooperatives, owned by their members, with a mission to serve those members' financial needs. This isn't just a small detail, it's the foundation of everything else. This difference in mission directly impacts the fee structures and interest rates you'll encounter. Because credit unions return their earnings to members, they generally offer lower fees for services like checking accounts, overdrafts, and ATM use. You're less likely to be nickel and dimed. More importantly, for credit building, they tend to offer lower interest rates on loans and credit cards, and often higher interest rates on your savings. Lower loan rates mean your payments are more manageable, making it easier to pay on time, every time, which is crucial for building good credit. Higher savings rates mean your money grows faster, giving you more financial stability. Then there's the customer service aspect. At a big bank, you might feel like a tiny fish in a vast ocean. It can be hard to get personalized attention or build a relationship with the staff. At a credit union, because they are member-focused and often smaller, you're more likely to receive personalized service. They often take the time to understand your individual situation, your financial goals, and your challenges. This can be incredibly valuable when you're trying to navigate the complexities of credit building. They might be more willing to sit down with you, explain your options, and guide you towards the best products for your needs. Finally, let's talk about their approach to lending. Banks often rely heavily on automated credit scoring models. If your score doesn't meet a certain threshold, you might be automatically denied, with little room for explanation or consideration of other factors. Credit unions, while they also look at credit scores, are often more flexible and willing to consider the whole picture. They might look at your job stability, your relationship with the credit union, and your overall character. This can make a huge difference if you have a thin credit file or are recovering from past financial mistakes. They're often more willing to give you a chance. Section 5. Benefit number 1. Lower fees and friendlier rates, keeping your money yours. Let's dive deeper into the first major benefit of choosing a credit union for building your credit. Those beautiful lower fees and friendlier interest rates. I cannot stress this enough, people. Every dollar you save on unnecessary bank fees is a dollar you can put towards building a more secure financial future. Think about monthly maintenance fees on checking accounts, high overdraft fees, or fees for using an ATM that isn't part of your bank's network. These can add up to hundreds of dollars a year at some big banks. Credit unions, because they are not trying to squeeze every last penny of profit for shareholders, typically have much lower or even no fees for these common services. Now, how does this directly help you build credit? It's simple. When you're not constantly battling high fees, you have more money available to manage your finances responsibly. You have more breathing room in your budget. This means you're less likely to accidentally overdraw your account, which can sometimes lead to negative marks if it goes to collections. More importantly, having that extra cash flow, even if it's just a little bit each month, makes it easier to pay all your bills on time. And consistent on-time payments are the single most important factor in building a strong credit score. It's foundational. Let's talk about interest rates. When you need to borrow money, whether it's for a car, a small personal loan, or a credit card, the interest rate you pay is a huge deal. Credit unions consistently offer lower average interest rates on loans and credit cards compared to banks. A lower interest rate means your monthly payments will be lower. Lower payments are easier to manage, reducing the risk of missed payments that can devastate your credit score. If you're trying to build credit, starting with a credit card or a small loan that has a manageable interest rate is absolutely key to your success. You are setting yourself up to win. Consider this. If you get a credit builder loan or a secured credit card from a credit union at a fair rate, you can make those payments comfortably. Each on-time payment gets reported to the credit bureaus, slowly but surely increasing your score. If you were forced to take a high-interest loan from a bank, or worse, a predatory lender because your credit wasn't perfect, you might struggle to make those payments. This could lead to a downward spiral of debt and damaged credit. Credit unions offer a lifeline with their more favorable terms, giving you a genuine opportunity to establish that positive payment history. Approved! Section 6. Benefit number 2. Personalized service. You're more than just a number. The second incredible benefit of banking with a credit union, especially when you're on a mission to build or improve your credit, is the personalized service. At many large banks, you can feel anonymous, like you're just one account in a sea of millions. When you have questions or need guidance, especially about something as sensitive and important as your credit, getting genuine, helpful advice can be a challenge. You might speak to a different person every time, someone who doesn't know your history or your specific financial goals. This is not the way to build a strong financial foundation. Credit unions, however, pride themselves on their member-centric approach. Because they are smaller and community-focused, they often foster a more personal banking relationship. The staff members are more likely to know you, understand your situation, and be genuinely invested in your financial well-being. When you walk into your local credit union branch, you might be greeted by name. This isn't just about feeling good. It's about getting better, more tailored support. They are there to serve you, their member owner, not to push products that generate the highest profit for the institution. This makes a world of difference. Imagine you're just starting out and want to understand how to build credit from scratch. Or perhaps you've had some financial missteps in the past and need help figuring out the best way forward. At a credit union, you're more likely to find someone who will patiently sit down with you, review your credit report, explain what it means, and suggest concrete steps you can take. They might recommend a secured credit card or a small credit builder loan specifically designed to help people in your situation. This kind of personalized guidance is invaluable. It's like having a financial coach in your corner. Think about Sarah, a young woman I mentioned earlier. She was overwhelmed by high-interest debt from a big bank credit card. She felt lost. When she went to her local credit union, they didn't just look at her low credit score and turn her away. They listened to her story. They helped her understand her options. They approved her for a debt consolidation loan at a much lower rate because they saw her commitment to getting back on track. That personal touch, that willingness to look beyond the numbers, made all the difference for Sarah. She felt supported and empowered, not judged or dismissed. That's the credit union difference. Section 7. Benefit number 3. Easier loan approval. A helping hand when you need it most. Let's talk about a really big one, easier loan approval, especially for those products that are specifically designed to help you build or rebuild your credit. This is benefit number 3, and it's a game changer. If you have a limited credit history, what we call a thin file, or if your credit score isn't exactly stellar right now, getting approved for a loan or credit card at a traditional bank can feel like hitting a brick wall. Banks often have very rigid lending criteria, and their automated systems can quickly say, "denied," without much human consideration. This can be incredibly frustrating when you're trying to do the right thing and establish positive credit. Credit unions, with their member-first philosophy, are often more flexible and understanding in their lending decisions. They are more willing to look at the bigger picture, not just your credit score. They might consider factors like your employment history, your income, how long you've been a member of the credit union, and your overall financial habits. They are often more willing to give people a chance, especially if you can demonstrate a genuine desire to manage your finances responsibly. This more holistic approach can open doors that would otherwise be firmly closed at a larger, more impersonal institution. Consider products like secured credit cards or credit builder loans. These are fantastic tools for establishing or improving credit. With a secured credit card, you provide a small security deposit, which usually becomes your credit limit. You then use the card like a regular credit card, making small purchases and paying the bill on time each month. Credit builder loans work by having you make payments on a small loan, with the loan proceeds being held in an account until the loan is paid off. Credit unions are often champions of these types of products because they align with their mission of helping members achieve financial stability. They are more likely to offer them with fair terms and guide you on how to use them effectively. I remember a young man, let's call him Michael. Michael had made some mistakes in his early 20s and his credit score was suffering. He couldn't get approved for a regular credit card anywhere. He felt stuck. A friend told him to try the local credit union. He was skeptical, but he went. The loan officer listened to his story, explained how a secured credit card could help him, and approved him for one with a small $300 limit. Michael used it wisely, paid his bill in full every month, and within a year, his credit score had improved significantly. That credit union gave him the opportunity he needed. That's the power of a financial institution that truly wants to help. Section 8. Benefits number 4 and number 5. Community roots and financial wisdom growing together. Now let's combine two more powerful benefits that credit unions offer, especially when you're focused on building a strong financial future and good credit: their deep community focus and their commitment to financial education. These might seem less direct than lower fees or easier loan approvals, but trust me, they play a significant role in creating an environment where you can thrive financially. Credit unions are often deeply embedded in the communities they serve. They are not faceless corporations headquartered hundreds or thousands of miles away. They are your neighbors, serving your community. This community focus means they have a vested interest in the financial health of their members and the local area. They understand the local challenges and opportunities. This can translate into more tailored products and services and a greater willingness to support local initiatives. When your financial institution is part of your community, there's a different level of accountability and connection. You're supporting a local organization that, in turn, supports you and your neighbors. This creates a positive cycle, where the well-being of the credit union is directly linked to the well-being of its members, fostering a sense of partnership. Benefit number 5 is financial education. Many credit unions go above and beyond just providing accounts and loans. They actively work to empower their members with financial knowledge. They might offer free workshops on budgeting, saving, understanding credit reports, avoiding debt, or planning for retirement. Some have financial counselors on staff who can provide one-on-one guidance. This commitment to financial literacy is absolutely crucial. Why? Because building good credit isn't just about getting a loan, it's about understanding how money works and making smart decisions consistently over time. Knowledge is power. When you have access to reliable financial education, you become a more informed consumer and a more responsible borrower. You learn how to read your credit report, how to spot errors, and how different actions impact your score. You learn strategies for paying down debt and saving for your goals. This education empowers you to take control of your financial life and build not just good credit, but lasting financial security. A bank might offer some resources, but the emphasis on truly educating and empowering members is often much stronger at a credit union because your success is their success. This is a partnership for growth. Section 9. The Smart Choice. Why credit unions win for building your credit. So, we've been on a journey together. exploring the world of banks and credit unions. We've looked at what they are, how they operate, and most importantly, how they can impact your ability to build strong, healthy credit. And by now, the picture should be crystal clear. When it comes to nurturing your credit score, giving you the support you need, and treating you like a valued individual rather than just an account number, credit unions have a distinct and powerful advantage. This is not just my opinion, it's based on their fundamental structure and their member-first philosophy. Let's quickly recap why credit unions are your smarter choice for credit building. They typically offer lower fees and better interest rates. This means more of your money stays in your pocket, making it easier to manage your finances and pay your bills on time, the cornerstone of good credit. They provide personalized service, taking the time to understand your unique situation and guide you towards the best solutions. This is like having a financial mentor on your side. They are often more flexible in their lending decisions, giving you a fair chance to access credit-building products even if your credit isn't perfect. This is a lifeline. Furthermore, credit unions are rooted in your community and genuinely invested in your financial well-being through valuable financial education programs. They want you to succeed because as a member owner, your success contributes to the success of the cooperative as a whole. This supportive environment, combined with tangible benefits like more favorable loan terms and fewer punitive fees, creates the ideal conditions for you to establish a positive credit history, repair past damage, and build a score that will open doors for you for years to come. It's about empowerment, not just transactions. So, if you are serious about building your credit, if you want a financial partner that truly has your back, I urge you to explore the credit unions in your area. Do your research, talk to them, see what they can offer you. Don't just default to the biggest bank on the corner because it's familiar. Make a conscious, informed choice. Choosing a credit union can be one of the smartest financial decisions you make on your journey to a stronger credit score and a brighter financial future. You have the power to choose. Choose wisely. Choose a credit union.